Hello investors and future investors, welcome to the channel. In today's video we will go through the trade of the week and I'll show you how to use it to make consistent income. Today's video will feature a bonus trade that can be used as well. So if you're new to the channel, thanks for stopping by. On this channel we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button, and while you're down there, consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So before we get into this video, we are now at 700 subscribers. Thank you guys for all the support. Now the winner of the 700 subscriber is gonna be none other than Jerry Ellis. Now Jerry, if you are watching this video, please send me a DM. My information is in the description below. Now let's get right into this video. So for today's trades of the week, we will be featuring the put credit spread and how we're gonna use it to make weekly revenue. So for today's video, we're gonna be using Trade Desk as our first stock. So let's go ahead and we're gonna hit trade TTD options in order to open up the Trade Desk options chain. Now once that's open, let's go ahead and go to sell and put, and very importantly, we will be choosing the closest expiration date to us, which is gonna be November 19th. Now the reason why we're gonna be choosing November 19th is because at the time of making this video, it is Tuesday and there's only 4 more days left until this expiration date. Now we will be choosing our strike prices below the current share price, and the current share price right now is 105.06. Now we will be going with a strike price of 103. Now we're selling a put, so the 103 strike price is gonna pay us $1.73 or $173. As you know, each option contract is multiplied by 100 shares. So let's go ahead, we're gonna go ahead and click into that. Now, as you can see, once you do this part of the trade, you will be receiving $1.70 or $170. But that's only half of the trade. For the second part of this trade, in order to make it the put credit spread, we now gonna need to go to buy and put, and now we're gonna choose our strike price below our sell price, which is gonna give us the $102 price. Now, since we're buying, we now have to pay. The amount we're gonna have to pay is gonna be $1.38 or $138. Let's go ahead, we're gonna click into it. Now, as you can see up here, it says put credit spread. If it says any different, then you've done it wrong. I suggest you do it again. Now, what you will be receiving once you do this trade is known as your total credit. Your total credit is gonna be 0.35 or $35. The way you come about with the $35 is going to be 0.35 multiplied by 100 shares. Now, in case you're wondering how you got the 0.35, this option strategy is known as a put credit spread for 2 reasons. One is the put part of it. You sold a put and you bought a put. The second part, the most important part, is the spread. The spread is going to be the distance between your 2 strike prices, which is 102 and 103. That's what's known as a spread. So the difference between your 2 spreads, the price here, will give you your total credit. Now let's go ahead to continue. We're going to choose the amount of contract we want, which is 1, and then we're going to hit review. Now, in addition to you receiving a minimum credit of $35, you will be needing to leave a collateral. That collateral is going to be $100. So how do you win this trade and how do you not so win this trade? Well, if on November 19th, TTD is trading at any price above 103, then you get to keep your minimum credit of $35 and you get your $100 collateral released back to you. Now, the other way this trade could go, once again, if on expiration date of November 19th, TTD is trading at $102 or below, then you keep your minimum credit, but now you have lost your $100 collateral. There is one third way in which this strategy could go. So once again, if on expiration date of November 19th and the TTD share price falls anywhere between 102 and 103, then once again, you keep your minimum credit, but this time you will get part of your collateral released back to you. Now, the reason why this is a very good trade for small accounts is because of the low cost of entry. The cost of entry for this strategy is only going to be $100. Now, remember the $100 and also the minimum credit. So for our bonus trade of the week, we will feature NVIDIA, ticker NVDA. Okay, so here we are on NVIDIA, and we're going to go to trade NVIDIA options in order to open up the NVIDIA options chain. Now, I'm not going to go into detail on this trade as I did in the previous trade. What I will do, if you're not familiar with put credit spreads, I will link a video to the top. So let's go. Once again, we're going to have to go to sell and put, and we will be choosing the closest strike date to us, which is going to be November 19th. Now, once again, we're going to choose our strike price below the current share price. The current share price is 298.28. Now, we will be choosing our strike price below it, and we're going to be going with the $295 strike price. Now, we are selling the put, so we're going to receive $7.05 or $705. Now, we're going to go ahead to the second part of the trade. We're going to go over to buy and put, and once again, maintaining our same strike date, we're going to choose the buy put right below the sell put, which is going to give us 292.5. Now, once again, since we're buying, we're going to have to pay money, and we're going to be paying $6.03 or $603. So there you have it. Once again, put credit spread. Let's go ahead and go into continue. Let's choose the amount of contracts, which is going to be 1. We're going to hit review order, and voila, there you have it. So once you do this trade, you will be receiving a minimum credit into your account of $103. That minimum credit is yours to keep no matter how this trade goes. The other criteria in order for you to do this trade would be leaving a collateral. The collateral you need to leave for this trade is going to be $250. So in case you're wondering how I came up with the $250, once again, this strategy is a spread. The spread is the difference between the two strike prices. If you were to subtract 292.5 from 295, you will get 2.5. 2.5 multiplied by 100 shares, and that will bring you back to $250. So these are my trades for the week for a couple of reasons. The first reason is the low barrier to entry if you're trading with a small account. As you know, on this channel, I like to focus on small account option traders. So the reason why I said it's a low cost of entry is for this reason. So your collateral for this trade is going to be $250, and your collateral for your previous trade is going to be $100. So even if you were to be trading with a small account, let's say under $1,000, you have more than enough money to enter 2 trades. Now, your returns on your investment is pretty good for only waiting 4 days. Remember, at the time of making this video, it's going to be Tuesday. So your return on investment for both trades is going to be 100 plus the 33, which is going to give you like $130 to $136. Now, we have lots of strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert when I post a video. But most importantly, share this video with someone you think that can benefit from its content. Let's help as many as we can. Thanks for watching, and always remember, keep pushing your investments.